So when the world gets chaotic, where does your money go? For years, right, we've all heard this idea that crypto is the ultimate shield against global turmoil. But is it really? Well, today we're going to crack open a really fascinating study to see what actually happens on the blockchain when conflict kicks off.
And this is the big question, isn't it? When things get rocky, do people see Bitcoin as a life raft, or is it the first thing they throw overboard? You might be surprised by the answer. Let's dig in.
All right, so to really get to the bottom of this, we need to talk about a key metric called active addresses. Now, don't let the term scare you. Just think of it like a head count for the crypto world. It's the number of unique digital wallets actually doing something, making a transaction. It's a fantastic way to see what people are really doing, not just how much money is flying around. It's kind of like taking the market's pulse.
Okay, first things first. To understand what happens during the earthquake, we've got to know what the ground looked like when it was solid. So let's rewind and look at the crypto market back in peacetime.
So in normal times, you had the two big giants of crypto, Bitcoin and Ethereum, and they had this super predictable relationship. You could almost think of them as these close dance partners who knew every single one of each other's moves. And here's how that dance worked. Bitcoin would take the lead, right? Its price starts climbing. And then you'd see savvy investors looking for even bigger wins, skim their profits, and pour that cash right into Ethereum. It was this classic speculative cycle, this waltz, all driven by one thing, the chase for more profit. And just how in sync were they? I mean, the numbers here are pretty mind-blowing. In these calm periods, a whopping 86.6% of Bitcoin's price moves could actually be predicted just by looking at what was happening on the Ethereum network. And get this, it wasn't just ETH following BTC. The activity on Ethereum was a huge tell for where Bitcoin was about to go. And then everything changed. Geopolitical conflict erupts, and the entire global financial world is just thrown into total chaos. And you can literally see the story right here in the data. Before the conflict, look, the market has this clear rhythm, a nice, predictable flow. But the moment that conflict hits, bam, the pattern just shatters. The music stops, the dance is over. So the takeaway here is that the entire logic of the market just broke. That speculative profit-chasing behavior that defined how Bitcoin and Ethereum interacted, it completely fell apart. The old playbook was suddenly worthless. So if the old rules are gone, what are the new ones? Well, when the chaos hit, a whole new behavior started to pop up, and a different kind of asset took center stage. You see, the whole psychology of the market just did a 180. Greed was out, and fear was in. People weren't chasing the next 100x coin anymore. They were just desperately trying to protect what they already had. The goal was no longer to get rich, it was to not get wiped out. And the researchers who studied this, they put it perfectly. They found that one specific crypto became, and I'm quoting here, an escape window. When investors were panicking and needed a way out of the wild swings of Bitcoin and Ethereum, this is where they ran. And that escape window? It was Tether, or USDT. Now, Tether is a special kind of crypto called a stablecoin. Its whole job, its entire purpose, is to hold a steady value. It's pegged one-to-one with the US dollar. So, when you're in a sea of crazy volatility, USDT is like a digital lifeboat. It lets you jump off a sinking ship like Bitcoin without having to leave the crypto world entirely.
So, this new behavior means that the signals we use to read the market have totally changed. The old ways of trying to guess what's next, pretty much useless now.
Now this is where it gets really fascinating. The data tells a wild story. Look at Ethereum's power to predict Bitcoin's price. It plummets from over 86% all the way down to less than 6%. It's basically useless as a signal. Tether, our digital lifeboat, stays pretty relevant. But here's the real kicker. The Crypto Fear and Greed Index, which is a measure of overall market emotion, it actually becomes more predictive during the crisis. So what this all boils down to is something really important. When the market is ruled by fear, the best way to guess what Bitcoin is going to do isn't by watching other cryptos. It's by watching fear itself. The general feeling, the sentiment of the market, that becomes the #1 signal, way more powerful than anything happening on-chain.
And this has huge implications for all of us. It means you just can't use a one-size-fits-all strategy for crypto. The indicators that might make you feel like a genius in a bull market can become completely useless, or even worse, totally misleading when a crisis hits. You have to change what you're looking at based on what's happening in the world.
And all of this leaves us with a really kind of mind-bending question. Think about it. In a crisis, investors aren't cashing out of crypto and running to dollars or gold. No, they're running to a different kind of crypto, a stablecoin. The emergency exit leads right back into the same building. So what does it mean for the future of finance when a system's safe haven is just another room in its own house? Now that is a question that's going to shape the future of money.